Hello traders, welcome to your daily market update for Wednesday the 1st of April 2015, and we've seen overnight a pretty quiet night in terms of currencies, but we did have some substantial moves in some and then others were quite subdued. Now coming up we do have a little bit of data as the week will start to heat up, and I want to start to look at the non-farm payrolls. I'll give you a bit of a warning there, but we've had some Australian building data and some Chinese data come out this morning, so that's boosted the non-US based equities, and we've seen a little bit of bounce there. We've seen a bounce in gold. Now, the markets overnight were supported at lower levels, and we didn't manage to break anything really substantial. So we are still in a range-bound sort of motion, I guess you could call it, and I think that's because the market is really looking to see what and when America is going to raise rates before we do anything majorly drastic, and also the outcomes of the euro situation. So we could be range bound for a little bit just around the regions that we are at, but unless some data comes out and the market really gets nervous, we could then start to see a sell-off on some currency pairs, and money to run back into the US dollar would be the natural flow again. We'll have a look at what we've got coming up tonight, because we do have the ISM manufacturing, and that's going to be important, but so is the ADP employment change, because that's an indicator for the non-farm payrolls on Friday. Now, the indication is that it's supposed to improve, and if that's the case and we do get an uptick on Friday for the non-farm payrolls, we could get quite a substantial rally in the US dollar. Why I say that is because it is a public holiday and markets are closed. There's going to be a lot of liquidity dried up in terms of who's trading around the world, and with that, with lower liquidity, becomes some more erratic, drastic, and over-the-top moves from the market as prices will jump and leap around. So I'd be very cautious of trading the non-farm payroll this Friday unless you are a very patient and disciplined trader and not too trigger happy or want to get in first before the news on a guess of what you think the figure's going to be, and then if it comes off, you make good money, and then if it doesn't come off, you're left crying in your hands. So just be careful of that, and we will continue to trade out the week as there is a fair bit of data. Now, the manufacturing data is going to be heavily watched coming into the European session, so definitely keep an eye on that. And we will see what impacts that has on the Eurozone, as well as the manufacturing for the pound. Now, it's supposed to come in a little bit stronger, but there is a potential risk to the downside, as we have had some indicative data earlier on in the week that has suggested that it could be a surprise to the downside. Now, if that's the case, it will weigh on the pound, and we could see it have a little move lower. Whether it's got enough power to take out the recent lows and break out of the consolidation that it keeps putting itself in, will yet to be seen. But then in the US session, as I said, these figures here, as well as Williams' speech, we've still got some members coming out. It looks like majority of the members coming out, and we've got Lockhart later on, but they're coming out and saying majority that an interest rate rise 2015 is the case, and the market will at some point latch onto that and start pricing it in ahead of the actual announcement. And when that happens, we'll see the US dollar bulls continue to drive the market. We're also very heavily dictated by the bond market, as there is a big divergence. So that is creating a big shift in the currencies, and currency volatility is likely to remain this way for the foreseeable future, at least the first half of this year, in my opinion. So be wary of all the volatility, but with volatility comes trading opportunities if you're disciplined. So we just need to know when to be in the market and know when to be out. And I think tonight we might get some trading opportunities. Looking in tomorrow, we do have trade balance for Australia. It is expected to be worse, and if that is the case, it will weigh on the Australian dollar. We also have New Zealand's dairy auction, so keep an eye on that. If we do have another weak figure, that will weigh on the New Zealand dollar as well. So we could start to look at getting some weak figures for the two current economies, and with this, we could start to see a sell-off. But for now, gold has bounced on the back of the China data, and we have had a little bit of support. And tomorrow's ECB will be very heavily focused, as well as the initial jobless claims. Thursday will be a quiet European session and a very active US session. The US dollar will still remain in the focus. Now, this is the dollar index, and we've seen, this is a 1 hour chart, we've seen the rally that we've had in the last few trading sessions, and then the US session, we just had a little bit of profit taking, and that's due to the end of quarter flows that I spoke about. Now they've dried up, and as a result, we've seen the US dollar have a bit of a pullback because everybody was positioning themselves and recalibrating back into the US dollar before the end of month, and now that we are at the end of month, they've started to take some profit. So we should get back to normal trading starting the European session tonight, and all the end of quarter shuffling of portfolio managers should have been completed. So we'll get into some normal trading. If we have a look at the charts, this is the downtrend here of the daily on the New Zealand, and we are still cautiously caught in what could potentially be, we had a very negative day yesterday, and I said that 75 cents may offer a little bit of support as it tested the back. It didn't. We've broken through and we're at 74.5, and we'll see if it wants to go lower and test 74 cents. If we do get a weak dairy auction and we get some weak Australian data, I believe that we will make a run for 74 cents, and we'll see what happens at that point. If that level's broken, it's a very critical level technical wise, then it will open up to lower moves. The Australian dollar is in a worse situation in that we've fallen all the way back down to the lows, but we've found support at 76 cents right along this bottom here. But if we get some weak trade balance and some further weak data coming out, I definitely think that that'll be enough to continue the momentum lower and take out the lows. But it has been a big pullback, and that's just purely US dollar strength, as well as gold coming off, and the commodities are definitely impacting the Australian dollar heavily. The New Zealand, sorry, let me get it right. The euro versus the US was the weakest yesterday in the European session, and if we have a look there, you can see that it has fallen substantially, but we found support at $1.07. We've bounced off that as the US dollar took their profit taking, and we're now testing $1.08. I think that we will see some resistance here at $1.08. We'll have to see what happens with the US dollar. If it does bounce off that current support level there and continues to trend higher, well then I think we'll see this continue to fall, and eventually I think we'll see $1.07 be taken out. The pound, on the other hand, had a bounce and a pretty indecisive day, and the price finished pretty much where it started. At the start, it looked like it broke out of this triangle and we're going to continue to fall away and test the lows down here. But we've seen a really solid consumer confidence index come out last night, and that started to get priced in, and we had a rally greater than the other pairs against the US dollar on the back of that positive news as soon as the US dollar started taking a little bit of profit off the table. So we're at this key point of convergence here, and it'll be interesting to see whether this downtrend remains intact and we see it fall away and the market forgets about the positive news we've had from the pound. But we do have some UK data coming up throughout the week, and it's going to be interesting to see if it does come in weak. We could see it continue lower, but for now we are still within this indecisive range-bound market. So this triangle breakout has broken out, but and we've made some lower lows, but we just need to see if this low here can remain below the most recent high, and see if we can make a lower high here and continue lower. Otherwise, we could just move back up into a range-bound market. The US versus the CAD now, it had a charge for $1.28, and for the third time it flamed out and failed to break it. That's on the back of oil and but mainly the US dollar profit taking, because oil has continued to fall a little bit, although we did have a little bit of a recovery during the session. So all that impacted, and if I go to a 4-hourly chart for you, you'll see here that we just had a bit of a flame out, but we've got a most recent uptrend line, and we have found support off that at $1.26.5, and we'll have to keep an eye on oil and the US dollar to see if it gets a bounce and makes a fourth run at $1.28, and see if we can sustainably get above that. So it'll be interesting to see how it plays out. The US versus the Jap is also in play, and you'll see here that we had an indecisive candle. Pretty much the bond yields keeping it subdued, and we've had a pullback. The pullback today in this volatility is on the back of the Japanese data, the Tenkan data that's coming out, and that's still coming out as I do this webinar. So I will have to keep you updated on the results of that through Twitter. But it seems like the data has come in weak, and we've seen a bit of a rally and a bounce off that. So we could see a bounce in the US dollar, and if so, this could continue to follow through should the Kentan data be weak. Well, that's my market update for today, and I'll be back again tomorrow. So until then, trade well.